All right, help me here. What in the world just happened to the stock of Honeywell? The iconic industrial, it's in the process of breaking itself up. This morning, the cut reported what sure looked to me like a good quarter, top and bottom line beat, management raising their full-year sales and earnings forecast. That's what I always like to see. The stock was climbing in pre-market trading, yet it ultimately got hit and finished the session down 6%. And look, the quarter wasn't perfect. There was some margin pressure, especially in the aerospace business, but much of the raised guidance comes down to a weak dollar, maybe some acquisitions. Still, I think it's crazy the stock pulled back this hard when we were getting so close to a three-way breakup that could really unlock a lot of value for you. But don't take it from me. Let's dig in with Vimal Kapur. He's the chairman and CEO of Honeywell to learn more. Mr. Kapur, welcome back to Mad Money.
Hi, Jim. Good to be back with you.
Oh, thank you, Vimal. Okay, so Vimal, I got the release. I looked at a quarter of six. And I like to look at things in the cold of day, and I realized, wow, this is really a good quarter. There's so many moving parts, but it's going in the right direction. Stock was looking up, and then it turned down. I have to tell you, I think that the turn down is a false narrative. But I'm going to give you the floor because of the many, many parts. Maybe there were 20. We found maybe 3 wrong and 17 better. Could you help us here?
Yeah, look, Jim, if you see the quarter print, it's very clean. Overall, we had a 9-cent beat to the consensus. Our organic growth was 5%, and 3 out of the 4 segments grew more than 5%, and 1 segment was flat. And it has been a while. Honeywell has printed a performance like this, where we had a secular growth in 3 of our segments at that high rate. And we raised the guide for the rest of the year. We started the year at 10.10 to 10.50. Now we are at 10.45 to 10.65. High confidence to deliver that guide. So overall, I would say how the year is progressing, we are very pleased with that. I mean, I won't comment on the market reaction. Sure. But what's also important, Jim, is apart from the financial performance, we are executing the 3-way separation on time. So we also announced today that we're going to spin the advanced materials business, our chemical business, in Q4. So that's going to definitely happen in a couple of months. And then we are on plan for separation of aerospace in 2026. And the third dimension, while we are doing this work, we're also transforming the portfolio. We completed the separation of our personal protective equipment business. We made 2 more acquisition announcements. So there's a lot going on, and I really feel excited how we're executing to what we say. And there's a lot of promising time ahead for Honeywell.
Well, I also think that there were two divisions that you felt weren't doing things right, and you said, listen, we're going to review those too, which means that if you don't think they can be fixed, I think that theirs are going to go too. But they counted against you, even though you said that it could be transitory. I think that people were just trying to shadow box with you.
Yeah, I mean, if you look at the 2 businesses, Jim, which you mentioned, we chose, they are very good businesses. Our workflow automation business, warehouse automation business, which is popularly known, very well-run business. We also have a business in scanning and mobility productivity solutions. Both these businesses fit less in the future I'm imagining for Honeywell, because we also want to have a Honeywell which is simple to understand. Our shareholders can clearly understand the value proposition, the verticals we play, our business model. So it's not that these are the bad businesses. We are really looking at the better fit for these businesses with the next owner. And it helps us to simplify Honeywell into 3 end markets. So when we complete the spin of aerospace and chemicals business, the remaining Honeywell will be just focused on pure play automation, focused on 3 end markets, process, industrial, and buildings. And these are compelling markets. There's a $500 billion TAM. A lot of growth opportunity available. So that's what really excites me. And that's the reason, Jim, we are proactively investing in R&D. One of the reasons our margins are flattish year on year, we are ramping up R&D, $100 million we talked about in this quarter. But for the whole year, the impact is about 40 basis points on the margin. But that's a good thing. We are investing for the future. We are building the portfolio. We are investing in the right new products. So we're keeping the company ready for the very compelling future ahead. So that's what excites me.
Meanwhile, that Carrier acquisition was fantastic. I mean, to me, it's cut and dried how great that was. People didn't want to focus on that.
Absolutely. Jim, that acquisition has gone extremely well. You can see the margin rates of building automation, how the building automation business is performing. 3 quarters in a row, 8% growth. Part of that is this acquisition is playing. The synergies are really working. Margin is expanding. So the acquisitions we made, they're all pivoting us towards higher growth end markets. That's a really focus we have been doing. We made acquisition of Access Solution. We made acquisition in the LNG area. All of that is really pivoting Honeywell to higher growth end markets. And we are well positioned with the work we are doing organically and the work we are doing inorganically. So we'll continue to stay focused on what we can control, and we'll let market decide, how they should value us.
Now, look, I know you've told me don't get ahead of yourself, but we've been doing a lot on quantum computing. And one of our actual guests tonight said that they feel like they're in the league with Quantinuum. I mean, they brought it up. I didn't. They said, oh, we're in the league with Quantinuum. And here I think that you don't even necessarily want to get anyone too excited about it because you're a hard-nosed business person. It's not the kind of thing you do. But when I hear another guest say that they think they're in league with you, I need to ask you, what does it mean to be in league with Quantinuum?
Look, Quantinuum is another exciting part of Honeywell. And Jim, we talked about it before. We are committed to do an IP of Quantinuum. I would say that next 18 to 24 months' time, probably more towards later part of 2027. The business is progressing well. We are making the right commercial progress. We got a big deal from Qatar, for example, during President Trump's visit in Qatar a couple of weeks back. We are doing a fundraise as we speak so that we could make sure that the company has enough cash to work towards before the IPO. But what I can say to you is we are executing to all our milestone. And I feel quite confident that Quantinuum should be able to get into IPO in next 18 to 24 months' time.
Oh, that's great. Also, I want to tell people that Dave Cote is my friend. He was my next door neighbor. You are continuing with the tradition of Dave, which is get this portfolio to where it could be. I mean, the PPE he had, that was a great idea at the time. You did what I think was right, was get rid of it. But this is the shuffling to make it better and better that's going on. I think it's confusing people, Vimal, and they shouldn't be confused.
No, Jim, we will do, I think we have done so much of work in our portfolio, so clearly we need to do a better job to tell our story. But as we complete these separations, part of it is going to be that we're going to tell our story across each of the 3 businesses. So we're going to have an investor day for our chemicals business later part of this year. We should be on the road sometime in Q2 next year as we are nearing the spins off aerospace and automation business. So yeah, I think the big part is we have made our portfolio and story very compelling, but we probably need to do a better job to get our story across to the market.
Well, no, I want our club members to buy it. I want us to buy it before you get the story too far across, because it is so clear and evident to me what's happening here. I think you're doing a sensational job. This is a very big spin, and it's really going to work. I want to thank Vimal Kapur. He's the chairman and CEO of Honeywell International. Read the deck. It's so transparent. You will reach the conclusion that I did. Trust me. Mad Money's back after the break.